Hello, everyone, and thank you for joining us today for using SAF codes in QAD for more robust reporting. I'm Denise, and back with me this month is Don Lindsey, 32Soft's own QAD and MRP guru. First, though, let me run through some very quick housekeeping.
Good afternoon. Hope everyone is having a good 2023. Over the last couple of months, we've covered several subjects around QAD, including security access. And last month, Alina did an excellent overview of master production scheduling using the 32Soft production planner. Today, I'd like to talk a little bit about a tool that significantly enhances the reporting and analytical capability of QAD, and that is supplemental analysis fields. Supplemental analysis fields, or SAFs, in QAD are user-defined fields that can be added to various screens in QAD, such as customer, supplier, item, and employee maintenance screens. These fields are used to capture additional information that is not already captured in standard QAD fields. Here are just a few of the things we'd like to cover today. First, we'd like to introduce some general concepts around the use of QAD and data analysis. Then we'd like to cover a specific discussion of the uses of the SAF or supplemental analysis codes in QAD. Those are SAF concepts, SAF codes, FAF structures, and reporting. As always, there are many terms and definitions that are associated with this subject, like schemas, analysis, logic, and SAF codes, that we should be familiar with. Remember, if you don't know the meaning of a term or phrase I use, please look it up on Google or GPT chat, or go to the knowledge base on the QAD website, or send us an email at 32Soft. As with past webinars, we have created a URL page on the 32Soft website that can help you navigate this subject matter of data analysis. When investigating any new subject, one should always look at it from an historical point of view. That is, who was involved? When was the idea first used? Where did the concept originate? In this case of accounting, data begins with the invention of double entry bookkeeping by Fra Luca Pacioli in 1494. The history of financial reporting dates back to ancient civilizations, where records of financial transactions were kept using different methods. For example, Egyptians used papyrus to record transactions, while ancient Greeks used clay tablets. So why do we need to do financial reporting? Financial reporting is essentially for maintaining transparency and accountability in corporate financial practices, and to ensure that investors and stakeholders have the information they need to make informed decisions about a company's financial health and future prospects. These include investors. They want to buy and share the company stock. Regulators such as the SEC, the Financial Accounting Standards Board, need to ensure that companies provide accurate, relevant, and reliable information to investors and stakeholders. Creditors use financial information to assess a company's creditworthiness and the ability to pay debt. Management uses financial information to make decisions, and auditors provide an independent review of the company's financial statements. In the United States, the first modern financial reporting standards was established in the early 1930s, following the Great Depression. The Securities Exchange Commission was established in 1934, and over the years, financial reporting standards have continued to evolve with the introduction of GAAP and the International Financial Reporting Standards. Before we dive into the specifics of supplemental analysis fields, let's talk a bit about the structure of data in QAD from a financial point of view. Data structures in QAD allow the adequate analysis of accounting information using GAAP and IFRS guidelines as appropriate. These major demarcations of financial data include domains, the basic unit of the system, entities, independent financial units within a domain, shared sets, which are a group of data that can be shared among domains, Profiles that identify the relationship between records in a shared set of different types, and business relationships, the detail of all financial. Domains are the base unit of the system. They define base currency and are the home of initial system and accounting data along with tax information. You must have at least one domain in QAD. An entity is an independent financial unit within a domain. It is used to generate financial reporting of a business unit. Create entities within the domain for the organization and entities your system requires. Perform intercompany accounting and consolidations within this entity structure to produce balance sheets and income statements for both individual entities and for the organization as a whole. Each entity is associated with a business relationship, which contains contact, address, and other default entity information. Site maintenance defines records that identify the places where you manufacture or store inventory for those defined entities. Sites define a general ledger entity and an account to be used, such as inventory and planning information. This includes inventory availability, manufacturing methods, costs, sales, purchase data, and manufacturing plans, along with orders and forecast. Location maintenance specifies areas within a particular site and entity where inventory is stored. Inventory may include shelves, bins, tanks, other storage areas. Inventory at the item level is key to QAD's ability to track and report on financial activities. Shared sets, as stated, are groups of like data that can be shared among domains. You can have multiple domains and multiple shared sets, or you can create multiple domains and just have one shared set. However you want to set up your business, financial, and informational data. When you have multiple shared sets for types of data, you use profiles to identify those relationships between the records in the shared sets, such as two domains with different charge of accounts for the same customers, or different AR and AP accounts for domestic and international trade. Examples of profile codes can be banking entities, cash paid, cost center, projects, sales accounts, or sub-accounts. A chart of accounts, COA, is an index of all the financial accounts in the general ledger for a company. In short, it's an organizational tool that provides a digestible breakdown of all financial transactions that a company conducts during a specific accounting period, broken down into subcategories. The general ledger consists of a GL account. GL accounts track financial transactions. They manage account balances and are used to produce financial statements. Sub-account, which is a further level of detail within an account. Sub-accounts can be defined and linked to customers or suppliers or other processes. Cost centers refine account and sub-account information, and projects provide analysis, cost, and revenue for specific activities. You can create the following types of accounts: bank, cash, closing, company cross-reference, customer control, customer payment, fixed assets, inventory control, open items, standard, supplier control, supplier payment, systems tax, and WIP control. Sub-accounts are typically used to report on financial activity of business units or divisions within an entity. A single GL account can be associated with multiple sub-accounts, appropriate to the balance sheet, profit and loss statements. Cost centers provide additional reporting levels for the GL accounts and sub-accounts. Project codes are chart of account elements that provide analytical reporting on activities such as engineering, design work, or even production rework. Combinations of chart of account elements that are considered valid are defined through COA mask functionality. These combinations are validated when transactions are posted, thus preventing reporting errors. Every COA element type has a separate COA mask maintenance function. The 25.3.9.1.1 subaccount mask specifies a subaccount cost mask code and lists Ranges of GL accounts with which subaccounts assigned to that mask can be combined with. The 25.3.9.2.1 Cost Center Mask creates specific cost center mask code and lists the range of GL accounts and subaccounts with which currently assigned cost centers can be combined. The 24.3.9.3.1 Project Mask Create specifies a project code mask and a list of range of GL and subaccounts and cost center elements which currently assigned project can be combined. Daybooks provide a controlled mechanism when requirements call for having several different transaction numbering sequences. Numbering schemas prevent fraud since each daybook produces its own integral numbering sequence. Daybooks are grouped in sets, which are then linked to customers and suppliers to determine which daybook to use for specific invoices. Daybooks have their own definable masks in 25.21.5.1.1 Daybooks Mask Create. Use these to specify a selection of daybooks and a group of daybooks that you want to lock at GL period closing. Accounting layers provide different ways of segregating transactions within a single GL account to satisfy reporting requirements. The posting of transactions is controlled by the associated daybook type with one of the three system-defined accounting layers: official, management, and transient. Calendars are often overlooked as tools for financial analysis. GL calendars are calendars defined at the domain level and applied to each entity within a domain. Accounting periods can be set between any start and end date and can be copied from previous years and others. At the entity level, you can modify period attributes as well as lock periods to transactions from different operational areas and in the general ledger. The GL calendars are used to define the standard work week for all manufacturing sites in a domain. Sometimes these are called shop calendars. Other calendars can be created, such as site calendar, product line calendar, cost center maintenance, and process calendar maintenance, all taking precedence depending on what level is defined. General ledger allocations are coded to automatically split transaction amounts based on predefined percentages during the operational transaction post. A general ledger transaction record is a detailed record of a financial transaction that is used to update the accounting records of a business. The general ledger is the central repository of all financial transactions that occur within a company, and each transaction is recorded in the general ledger in the form of a journal entry. Just like any supply chain user understands the transaction tables, the accountants similarly need to know and how to read the general ledger transaction records, as these represent the occurrences of financial impacts to the business. Business relations contain location and contact information for all addresses defined in the system. Business relationships also contain tax details that are directly referenced or used as default for customers and suppliers. Business relations were introduced to MFG Pro in the transition from SE Standard Edition to EE Enterprise Edition when Pam and Carl purchased the Belgian finance application SoftCell in 2015. Here is the list of functions that require business relation definitions: entity, customer, supplier, end user, ship to, doc, company address, salesperson, and fixed asset location. The 36.1.4.3.1 Business Relationship Create. In the header, it defines the business relationship ID, 4 different names to associate to a record, and the active code. The 36.1.4.3.1 Business Relationship Create Address Info tab contains 32 different elements of the business relationship record. Depending on your tax system, the tax class and tax usage codes are used to accommodate differences in taxations within a tax zone. These apply to all domains in the database. The General tab of the Business Relationship defines language codes if the domain is restricted, internal entities, intercompany codes, compensation data, tax reports, name control, and the last filing date for the business relation. The Default tab creates SAF codes for the business relation. We will discuss supplementary analysis fields a little later in the session. Since most of the processes that are exposed for financial reporting with SAF and other data structures are business relationships, let's take a quick look at the 32Soft loader that makes update and creation of business relationships in QAD effective and easy. One can enter multiple addresses per business relation and multiple contacts per address. It also validates and verifies the upload to QAD. Supplementary Analysis Codes is a tool that allows additional levels of detail to certain transactions and records in the system. SAFs allow companies to capture detailed information about their customers, suppliers, items, and employees, which can be used for reporting and analysis purposes with such data types as text, numeric, or date. Up to 5 supplementary analysis fields on a posting line can automatically retrieve SAF data from operational transactions for sites, product lines, regions, customer types, supplier types, and item groups. One of the most difficult things about supplementary analysis fields is to get your head around all of the places and tables that SAF codes cover. From budgets to locations to business relationships to consolidations, financial reporting, and master account postings, even into revenue recognition. We would recommend a thorough understanding of the entity diagrams for SAF codes. Let's discuss a little regarding the setup of SAF codes. SAF analysis is managed through a combination of 3 elements. The SAF concept, which is used to identify the type of analysis required, SAF codes, which define the analysis details and associate codes with existing concepts, and the SAF structure, which contains a selection of concepts in a logical sequence and associates with the structure for the GL cost center or project. There are basically 3 steps in creating your SAF process. Step 1 is to create the concepts and the SAF codes. Step 2 is to create the SAF structure, adding concepts and codes to the structure. And then step 3 is linking the structure to a GL cost center or project. Use the 25.3.7.2.1 SAF code create to create values that are assigned to SAF concepts. Create an SAF code for each type of transaction that updates an account. These generally correspond to individual objects or concepts which need analysis. QAD provides 7 SAF concepts which are predefined and provided with the system. The predefined SAF concepts are designed to interact with operational transactions and capture key analysis details used to report the GL effect of operations, such as sales by region, sales to OEM customers, or work order by type. These 7 codes are product line, site, item type, item group, region, customer type, and supplier type. User-defined SAF codes require additional setup. Create these user-defined codes in 25.3.7.1 SAF concept create based on your business requirements. Unlike system SAF concepts, these do not automatically retrieve code values from transactions. Instead, you manually create both the concept and the SAF code used and then select the code or define the defaults. Use 25.3.7.1.1 SAF concept create to create SAF concepts in your system. Caution should be taken as the following restrictions apply to creating SAF concepts. Number 1, you can't delete a system concept. You can't delete a user-defined SAF concept if it's already in a transaction. You cannot create system concepts. Only value set to active can be modified for a system concept, and you cannot deactivate a concept if it is linked to an active structure. There's so many things you can do with things like this, such as look at car registration, customer types, employees, formulations, item types, subjects, purpose, quality, regions, sales reps, sites. So many possibilities. Use 25.3.7.4.1 SAF structure create to combine up to 5 SAF codes in a sequence. Please note, only one FAS structure can be linked to a general ledger account cost center project. When the FAS codes are associated with a project, center, or account, and the transaction is posted, the system updates the elements, the SAF concepts, and default codes in the transaction posting line. For system concepts based on operational transactions, values are retrieved automatically. However, when user-defined concepts have more than one value, one must select the value to use when the transaction is created. The creation of SAS concept, codes, and SAF structures can be somewhat intimidating. It's probably much easier to conceptually manipulate these schemas in a media outside QAD such as Excel. Use 25.3.7.1.5 to accomplish this. The 25.13.1.1 journal entry create is the basic transaction in the accounting system. Use journal entry create to manually record transactions for financial daybooks and to utilize FAF codes. Level 1 posting line contains fields for general ledger, subaccount, cost center, journal entry description, debit and credit amounts in base currency. Additional fields at level 2 include transaction currency, quantity, intercompany data, cost center, project analysis, SAF fields, open items, and tax details. SAF concept and FAS code selections can be modified in 25.13.1.1 to accommodate user-defined SAF codes. FAS codes in QAD can be defined on multiple levels and in multiple places, such as on the 25.3.13.1 GL account create analysis tab. The default tabs of 27.20.1.1 customer create or 27.20.1.2 customer modify can specify default values for concepts within an SAF structure. Projects are chart of account elements that provide analytical reporting on activities such as engineering design work or production rework. A range of account codes, subaccount, and cost centers and FAS codes can be associated with a specific project or multiple projects. The default tabs for 28.20.1.1 supplier create and 28.20.1.2 supplier modify can be set for default values of SAS analysts and code definition for the supplier. QAD's 25.13.1.1 journal entry create is not the easiest of screens to navigate, but nonetheless critical to input correctly. To address this issue, 32Soft has a journal entry EE data loader that now has SAF codes and reverse journal entry functionality. The loader has a simple, convenient format that delivers meaningful information to you in a clear and organized way. It works with all versions of Excel, is far superior to QAD's Excel integration, and this loader maintains standard and reversing journal entries from one tool with SAF support. SAF codes can be particularly useful for businesses with complex operations, multiple product lines, or diverse customer bases. SAF codes provide flexibility to organize and analyze data and help the business gain insights that would be difficult or impossible to cover otherwise. So what did we cover today? Well, we talked about data structures, domains, entities, sites, locations, chart of accounts, general ledger, talked about subaccounts, cost centers, projects, discussed profiles and masks, daybooks, accounting layers, GL calendars, allocations, and business relationships. We talked extensively about SAF, setup, concept, code, and structures. We covered GL transactions and journal entries and introduced a couple of useful 32Soft loaders for business relationships, and journal entry. All of these tools help the organization understand the financial performance of the operations in a much more detailed and structured fashion. Again, I would recommend you to do the following to increase your skills with financial reporting in QAD. There are the QAD forum. Note the reporting and analysis group. QAD just did a major upgrade of the QAD forums to 2.0 in April of this year. Discussion, resource, and job boards are available at the West Coast User Group, Midwest User Group, and Southeast User Group. There is the QAD knowledge base. I use the knowledge base every day. The QAD document library is another tool I use on a daily basis. The QAD Learning Center is an excellent space to learn more about QAD. As I mentioned before, here is a list of the URLs complete with clickables for all the slides, documents, records, and sites that were used for this presentation. Just click the URL link on the 32SOP website and you are brought to a list of the URLs for various subjects regarding data analysis that you can use to help you better understand the use of data in your ERP system. Just a word about 32SOP data loaders. Once you've learned all there is to learn about the supply chain, you will all come to the same conclusion I have. ERP systems require a huge amount of data to be useful and accurate. 32Soft offers several, many, too many to list here, data loaders and applications that can assist you around most QAD functionality. From the production planner to sales orders to SAF codes. 32Soft data loaders use the familiar Excel format, which makes it easy to get data in and out of QAD. There is a 60-day complimentary trial period, which makes installation simple. Christian, Andreas, and Olin are always there to help. 32Soft loaders work with all versions of QAD from SE to EE. Please contact Denise, Alex, or myself if you're interested. We hope you've enjoyed this quick overview of QAD's financial data and supplementary analysis fields functionality, and how one might use this to help you deal with the massive information that all ERP systems provide. SAF codes greatly enhance your ability to understand the operation of your business. Stakeholders expect the business to run with optimum efficiency and have the ability to dig down through the multitudes of financial data to uncover and better understand the machinations of the organization. Please contact Denise or Alex or myself if you think you have any questions regarding financial analysis or SAF codes in the QAD after the webinar is closed, and we'll be glad to get back with you as soon as possible. Thank you so much, and back to you, Denise.
Thank you so much for that, Don. Lots of great information, as always. We will now move right into the Q&A. Up next, Don returns with us both in June and July to show how we can get control of product changes. That one's on June 21st, with an overview of the change control process, key elements, and an option for more efficient change management. And then in July, on the 17th, Don will cover price lists. He'll share with us best practices and show how we can manage our price lists quickly and easily. We hope you can join us for both of those. And then I know summer is barely on the horizon, so forgive me for looking ahead to the fall, but the Midwest and West Coast user groups are prepping for their respective conferences already. And I'm really excited about both and being able to, again, put some more names and faces together. And as each conference gets closer, we will have more details for you about the 32Soft presentation topics. But meanwhile, if you're not a member of any of the QAD user groups yet, they are so worth your consideration. Tons of knowledge to be gained, right?
Yeah.
And speaking of that, with that said, let's return to today's tons of knowledge. Thank you, Don, with a final thought about robust reporting. Most definitely, the devil is in the details. And where there is data smoke, there is business fire. I like
Great quote. Great quote.
Right? Pretty good.
Good stuff.
Yeah.
Devil's in the details. Right?
Yeah. Is there anything else for us today, Don?
Now, I appreciate everybody's attendance. Look forward to talking with you again in June on product change control and July for the price lists, and then August we get to take a little vacation. So
A little bit of a break in August, yes.
there you go.
Well, thank you, Don, for your time taken to prepare and share your expertise as always. We really appreciate it. And as always, thank you all for taking the time out to join us today live. And hopefully we'll get to see you all again next month. Have a great day, everybody.
Thank you so much.
Thanks, Don. Bye-bye, everybody.
Bye-bye.